Meeting. So today's discussion, closed and funded. This is the fun stuff, right? It's what everybody want to talk about. I'm getting to the closing table. So closed and funded, the closing process for realtors is our discussion for today. For those who I have not had the opportunity to meet yet, I do see a lot of familiar names. So good to see you guys again. Happy Tuesday again, going into a 3-day weekend. So today, for those who I haven't had a chance to meet, my name is Ray Cole Jackson. I am the founder of Title Experts, title insurance and settlement firm, also Realty Law Group. Let me do this really quickly so that let me do this, 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 so that I'm looking more at you versus to the side. So I'm the founder of Title Experts, a full service title insurance and settlement firm. I'm the founder of Realty Law Group, your full service real estate law firm. Also the founder of Transaction Experts, a real estate transaction management and settlement services firm. I am originally from Florida. I attended the University of Florida. As we say on every call, go Gators. If you're a Seminole, be quiet. When you present, you can say go Noles. I got my law degree from Santa Clara University in California, moved back to Florida, Miami specifically. And one second, make sure admit. Oh man, I have to make sure that I am admitting everyone. Admit all. Put this here. Have to make sure that I'm getting everyone. Moved back to Florida, Miami specifically, and I obtained my LLM in real property development from the University of Miami. That's essentially like a master's degree, a specialization in real estate from the law school. And I am a licensed real estate professional. I actually first got my first real estate license in California during my second year of law school. Always been interested in real estate. Moved back to Florida and got my license here. Why do I say that? I always say that because I want to make sure that you guys understand that I'm coming from a posture of I used to be, trying to get to the closing table just like you guys all the time. So when people ask what makes you different, I say, well, first of all, I don't kill deals. I know everyone always says attorneys kill deals. Well, listen, I've been there. I will never kill your deals. Matter of fact, you will find me being the one saying, listen, for closing sake, can we come to a resolution and get this thing over the hill? Because nobody gets paid, including us, until we close. So that's our main difference here, outside of just wanting it to be a very fun closing experience for all parties involved. So let's get to the topic of the day, title insurance. And so the purpose of this, because I feel like it's one of those things where you really don't understand what it is, why it is, but you're like, okay, we got to do it. So here we go. Here's my contract. So what is title insurance? Title insurance, just like health insurance, and I keep looking to the side, I guess you guys, so just because I'm letting in people, so that title insurance is similar to health insurance, car insurance, life insurance. It is an insurance protection that insures against financial loss from defects in title to real property, right? So making sure that, one second, I gotta mute my phone like we're in person around here. Making sure that your client's purchase of real estate, as well as if it's a finance transaction, the lender's loan on the property is insured. They're not going to come back and find out there's issues, right? And so with that being said, at the culmination of closing, at the end, we issue title insurance and we issue funds. So that's why you hear the term title and escrow, title and escrow. So title insurance, if it's a finance transaction, we're going to issue two policies. We're going to issue a policy to the lender, and this will protect the lender. It protects the lender, but it provides no coverage to the homeowner. Now, believe it or not, in other states, homeowners insurance is technically, well, here is actually very optional. It's 100% optional, but it's just a given. Like no one purchases without getting an owner's policy, right? You shouldn't. But in other states, sometimes they'll go without an owner's policy. Here, we always do owner's policy. We do a lender's policy if it's a finance transaction. And so likewise, the owner's policy is going to protect the homeowner. It protects the homeowner against prior title defects. Now, when we issue the lender's policy is going to be up to the amount of their loan. The owner's policy is going to be up to the amount of the purchase price. So you say, what's the policy amount? That's what you're going to see when we go a little bit further. I'm going to show you some of the documents that we use when we close these transactions, right? So what does title insurance cover? Um, it covers improper execution of documents. Believe it or not, when title is examined, our examiners, they look at the execution of prior deeds and they say, that signature looks a little suspect. I'm not sure that that's actually Mabel Sue that signed that deed back in 1902. I'm just being. If you guys have heard me before, you always hear me say I use ridiculous examples because those are the ones that you will what remember. So our examiners, they look at signatures and they'll send back a requirement that says, we need an affidavit. We need someone to testify. That's what an affidavit is. It's written testimony and affirm that that is in fact her signature, because we're just not sure, right? Title insurance also covers mistakes in recording and indexing legal documents. What does that mean? That means documents recorded out of order. That means documents recorded on the wrong property. You guys probably heard me mention before when I do the contracts class where it has the description of the property and you guys will put the address. Sometimes you put the short legal description, or sometimes you're very concerned about the address being correct. Well, listen, in title, we go based on the legal description. So our documents are recorded against the legal description, and so that must be accurate. And so if something is recorded improperly against a different legal description, then that's covered by title insurance. It covers forgeries and fraud. Again, going back to the example of a deed being fraudulently executed, it's forged. It's the someone's signature is forged, and so that's a fraud deed. That's going to be covered by title insurance. Undisclosed or missing heirs, that's covered by title insurance. Unpaid judgments and liens are covered by title insurance. Unreleased mortgages are covered by title insurance. But here's the thing to know: title insurance covers the date of closing back. As of the date of closing back, right? We can't insure for anything going forward. We're not there. We're not protecting that. If someone records a mortgage improperly against your property 2 years after you close, we don't cover that. If there's a mortgage that should have been cleared from 2 years prior to your purchase, yes, call us with your policy and we are covering it. That's what we're saying to your clients when they close. So that's a key thing to understand. Title insurance covers as of the date of closing back, not forward. Okay? So here's what we need your help with, and here's what you should know when a file comes in for closing. Our first process is obviously intake and onboarding. We're going to be working on getting the buyer and the seller's names, obviously, making sure that they're correct, as well as, yes, we'll send the PDF as well as the video. Deborah is making sure of that. I'm going to move this here. We're making sure their names are spelled properly and that they're accurate. What does that mean? Sometimes a buyer will just put, Jane Doe, but her full name is actually Jane Marie Doe. And, Jane, and more importantly, that's how she started her loan approval process. And so that's what the lender wants to see on the title documents. Or the seller's name. Let's say the seller, they executed the contract, name is Ray Cole Jackson, but I took title as Ray Cole Myers Jackson. Then the documents are going to be updated to reflect Ray Cole Myers Jackson because that's how I took title. We're going to need the social security number specifically of the seller. This is important because we talk about FERPTA, and sometimes we understand that clients can be sensitive about their social security number, but as title agents, we have an obligation for sellers to confirm a social security number or a tax ID number for what? For tax purposes. At the end of the year, we must report the sale of real estate. That's a taxable event. And so if we do not report it, then we're liable. So what ends up happening is we are sure to explain this to sellers. Listen, we must have your social. If not, we're going to have to assume that you're foreign. And if we assume that you're foreign, then we're going to have to take 15% of your sales price and send that to the IRS. It's a little bit heavy-handed, but when we say that, then it makes sense. And then they're like, okay, where do you need me to send it? Before then, they're like, no, I'm not giving you my social. And then we tell them that, and we show them the statute, and they're like, okay, give me 2 minutes, and I'll send it over to you right now. Can I call you with it? So that's one of the reasons why we need it. Address and phone numbers for obvious reasons. And then we need your information. So it's always unique. We'll get the contract from one of the realtor partners, but the contract, unless the email comes in from maybe a transaction coordinator, or the realtor is forward thinking enough to say, hey, here's the cooperating agent's information, we have to reach out forward. So that's a little a pro agent tip for you. When you send over the contract, if you know that the cooperating agent's information is not on the contract, I am starting to see emails and phone numbers written in on the bottom of the contract. But if it's not there, include it in the email. That'll be one less kind of search for the other agent's contact information. Now, after the contract is taken in and the information requests are initiated, generally in about 3 days, we're looking for the escrow and earnest money deposit. Escrow and earnest money deposits can be made by personal check, cashier's check, or bank wire, are the general ways that they can be made. Here's what we need you guys to know. Wire fraud is still an issue. It is still an issue. And what is wire fraud? Wire fraud occurs when an individual receives and follows fraudulent wire instructions. These instructions are usually sent via email, but they can be delivered by any means. Meaning, if a hacker gets a hold of your email, they may send a text message, and they could send it from a PC. They could place something in the mail. Here's my point, and I use this to say, listen, it can, the reason why it's difficult for us to prevent wire fraud is because you would have to essentially cut off every line of communication to your buyer and your seller. That's what it's about. Wire fraud is about getting fraudulent wire instructions to the party that's going to be sending the funds. Does that make sense? Right? So unless I could just completely cut them off from the outside world, there's always going to be a potential that fraudulent information is going to be sent. Fraudulent wire instructions are going to be sent. So what do we do about that? We tell the clients, because of this, just know you're never going to receive wire instructions outside of our secure portal, right? So if you give them a protocol on how to expect to receive the wire instructions, if they receive them any other way, their antennas should go up and they should not follow those instructions. Likewise, I suggest that you place in your signature block instructions that they will never receive wire instructions from you. When a hacker sends an email, they lift title agents information, they lift realtors information, they lift any party to the transaction that they see the buyer communicating with a lot. They will lift that information, steal your signature block even, and use that to send a email to your client saying, hey, wire your funds here. Now, with that being said, the last point that I'll make on that, you guys make sure that you do not send wire instructions to your clients. Do not send wire instructions to your clients. I know back in the day, a title agent would just send you a wire instructions. You keep the wire instructions on file. You send them to your client. You're so anxious to make sure that your client gets their wire in. Do not allow anyone to send wire instructions to you to send to your client. And you also don't request them. Get in contact with the title agent. Have the title agent send the wire instructions to your client so that there would never be a confusion, because you'll be able to say, hey, I never send wire instructions. So you'll never get them from me. So if you ever get an email purporting to be from me with wire instructions, don't follow it. Call me, call the title agent. All right, so I got a quick comment. I have a recent situation. If I would do Friday, 21st of May, I have her email. She wants to send. I said to my days begin. I'm trying to. She wants me to extend 3 days. Extend what specifically? Why won't they clear another 3 days? Let me find you really quickly, Sylvia. And I'm gonna unmute you. Sylvia, you want to come on mic and explain that really quickly?
Yes, I will. Can you hear me?
Yep, I can.
Okay, I'm fighting a cold, so I come in squeaky. Um, it's an international buyer.
Uh-huh.
They sent a wire transfer, which was due Friday. She sends me a copy of it, but I have no wiring, routing numbers, nothing, stating that the money was wired on the 21st. She wants me to do an addendum and extend it. Well, she sent me an addendum to extend for another 3 days for the money to come in. I said, no, money was due Friday. Am I wrong?
Not really. No, not really.
Okay.
I
All
mean,
right.
only because, you know, in this market, you're tying this property up an additional 3 days
Exactly.
when there's a chance that at the end of those 3 days you still don't have money. So no,
Okay.
unfortunately. Because at the
Thank-
very least, if you could get some type of confirmation, that would help if you had like a Fed reference number or something. But it sounds like you're saying you have no confirmation that these funds went out.
No, just a copy that says transaction was done. And I said, no,
Yeah,
I
no,
don't see routing number. I see what, no wire information.
no,
Where'd it go? What account did it go to? Where'd it go? I don't
yeah,
have any of that.
yeah. Ask her to get you. If Ask them to get you some confirmation that it actually went out, and then maybe that will be something. But I don't think it would be unreasonable for you to not extend.
Okay.
All
Thank
right,
you.
no problem. Good question. All right, okay. So we're clear on wires. That was a good question. Now, once the oh, one other thing I want to say about that because I'm glad you asked that question. The Let me put my phone down. All these text messages. The buyer has a duty. I want to talk about duty really quickly. The buyer has a duty to get that wire out. Goes to Sylvia's question. If the title agent does not get the escrow letter out until, let's say, using Sylvia's um, hypothetical, if the title agent doesn't get the letter out until the next day, the buyer's not in default. The buyer made their wire deposit, their escrow deposit. They've satisfied their requirement. There's nothing in that contract that says that an escrow deposit is to be made and a, a escrow letter, escrow letter received the same day. Does that make sense? And so let's not get all technical and start creating issues where there is none. If you have proof that the wire has been sent, you have a Fed reference number, you have confirmation, and that's been sent to you, 9 times out of 10, you're going to get your letter. But again, let's not create issues where there does not need to be one. Send the confirmation that the wire has been sent. Let the title agent send you that escrow letter. Give them 24 hours. It'll be okay. You won't die. And then you have a conversation the next day. Similarly, the title agent has no obligation to chase down earnest money deposits. If that earnest money deposit is not made, the title agent is going to say, hey, just to let y'all know, we still don't have it. But they're not saying, picking up the phone, hey buyer, your escrow deposit was due on the 21st. Today's the 22nd. Where is it? That's not their obligation. It's not their duty. They're not going to do it. So you guys want to make sure, both buyer and seller side, that those escrow deposits have been made accordingly. All right, quick question. I had a similar situation. Uh, and this was sent directly to me, guys. So I'm going to read the question. I had a similar situation. Funds were wired from Switzerland and took a few days longer. As a listing agent, we did give a few more days for the money to come in, but we did have the confirmation that the wire was sent. Exactly. Ruth had the confirmation that the wire was sent. So seeing the funds is one thing, and I think we talked about we are going to talk about this towards the end of our talk today about the timing of funds actually hitting the account. If you know your client is, like Ruth mentioned, foreign, the money's coming internationally, or your buyer banks with a credit union, you need to get that wire initiated well in advance to make sure that the funds hit the account timely, because they take longer. It takes longer for the funds to hit the account. So thanks so much for that, Ruth. All right, moving along. Once the escrow deposit is cleared out, cleared up, we got it, escrow letters are going out. Now the searches are being ordered by the title agent. The first search that we order is the title commitment. The title commitment is prepared by conducting a title search. The title search is reviews the property's history of documents recorded in the public records. The title commitment itself is a result of that search, and it indicates any title issues that are to be resolved as a result of that title search, right? And so what you see, what we send out once that title commitment is received, you'll see Schedule A, just so that you can see we're going to go through a title commitment so you know what you're looking at. So Schedule A, you see the commitment date. That's saying that the commitment date is going to be the date that the search results comes back. So let's say we order the search on using this hypothetical, let's say we order on the 21st. The results came back on the 28th. This commitment is based on what's recorded against this property as of the 28th. If something is recorded on the 29th, that's not going to be included here. Even if we send you this commitment this is January 28th. Let's say we sent you this commitment on February 2nd. Anything that's recorded from the 29th through whatever is not going to be on here. And that's why we do what's called a gap search. And we're going to talk about that later on. And that is, here's what's been recorded within the gap. And so now you guys are going to know as you go through closing, if something comes up during the gap, you're not going to be like, well, wait a minute, how does this happen? Because there is a gap. There's a gap. This came up after the search was conducted. What usually comes up in gaps? I'm going to tell you. Notice of commencement, they come up in the gap. If someone starts to do work, let's say, for example, there was a roof that you guys agreed that a roof repair needed to be had. And so the seller goes and they get a roof done. And so now the roofer has recorded a notice of commencement against the property. That has to be cleared before closing. And so if we do our gap search 48 hours before closing, because our underwriter requires us to do this gap search as close to closing as possible, and it comes up in the gap, guess what? We're not closing without this notice of commencement being resolved. And so this is how you can have title issues come up 48 hours before closing, because they occurred after the search during what we call the gap. All right. So this Schedule A, this is the commitment date, says 11 p.m. This one is a finance policy. So we have a owner's policy going to John Doe and Jane Doe for $265. You have a loan policy going to Loan Depot for $274,540. And this is probably what you call a VA loan. So it's above what their purchase price is. Paragraph 4 shows you that this is our seller's name, Sandra Seller, by a deed from Docket Group. Remember we talked about how names need to change. Let's say Sandra executed the contract as Sandra's Seller Super or something, or Super Seller. Well, it says Sandra Seller, and these things need to be exact. And so the documents are going to be prepared for a deed from Sandra Seller. This is your Schedule A of your commitment that you're going to see when it comes out. Schedule B1, these are the requirements. These are, hey, title agent, here's what we found in those documents that we pulled from the public records. And here are all the things that you must do. See, all the following requirements must be met before you issue policy. So the first few, this 1 through 4 is what we call our standard requirements. They're going to be on every commitment. Every commitment has these 4 standard requirements. And so they're telling us that we have to have a deed from Sandra, from our seller to our buyer. And they're saying that we need to have a mortgage executed from our buyer to our lender. And it's also saying that the warranty deed from Sandra, that her spouse needs to join. And so when we get into, well, they're separated. Are they still married? You see, so you guys see for yourself. This doesn't say separated. It says joined by spouse if married. Okay. So if they're married, their spouse has to sign the deed. If they're not married, then we can place in their, if they are married, but it's not their homestead property, then we can place in their home non-homestead language. Now, what else is on here? We see that we need to record a satisfaction of mortgage from Sandra. We need to record a release of summary memorandum. This is a PACE loan right here. Notice of commencement. There was some work done on the property. That needs to be resolved. A title update commencing from the commitment date must be performed prior to closing. This is the gap search requirement we just talked about. We are required to perform a gap search. The commitment must be endorsed to require clearance of any title defects or adverse matters there. So anything that comes up during our gap, we have to update this commitment and add those items to it. Welcome behind the closing table. What I want you guys to know about this, take a look at this. I don't expect you guys to be able to clear requirements, obviously, but what I usually say is if you see something funky on there, if you see something about a mortgage from 1985, you're like, wait a minute, they purchased this property in 2007. Why is there a mortgage from 1985? That should clue you in like, uh-oh, title has some work to do here. Or if you see them asking about a divorce decree, I always use that example because the clients get mad with us when we bring up, well, we need the documents from your divorce. If you guys take a look at it, and when you get that frantic phone call from your seller, then you'll already know, well, this is part of their requirements. It's something that they must do, right? So there's the title commitment. Now, we also ordered the lien and open permit search. You guys know that. So this is an example of what we get back from one step. And so on this one is pretty clean. So we get green, taxes are paid, no delinquent property taxes. There's no personal taxes on this one. There's generally always going to be water due, right? So it's saying that there's a water bill. There's no waste information here. So we're going to pay this water bill. Now, here's what you need to know. This has a code violation that must be cleared prior to closing. What do you guys know from our prior class? Open permits, unless agreed upon by the parties, are not required to be closed out. They're not title issues. They are specifically excluded from title insurance coverage from the jacket that's sent out with that title commitment. The title commitment clearly it excludes open permits. So unless the parties agree by virtue of adding that language in the additional terms section of the contract that all open permits will be closed out prior to closing at seller's expense, unless that language is there, if an open permit comes up here, we're going to say, hey, you guys got a permit. You want to talk about it? But we're proceeding. We're going to have your clients assign a hold harmless, acknowledging that they are aware that there's open permits, that we don't close them, that there's no title issues. But as it relates to us, we're moving forward. But this code violations must be resolved. Right? So remember that. Open permits do not require resolution unless the parties agree. Code violations must be resolved. They are title issues. If you were to say, oh, well, we're not concerned about the code violation, guess what? If there's a lender on it, they probably are. Because if you decide to proceed with this code violation open, we're going to take that code violation and we're going to move it to the exceptions portion of the title insurance policy to say we're not covering this code violation because you knew about it. It wasn't cleared at closing. It's excluded. It is an exception to coverage. Right? So we talked about the title commitment, which is the public record search. Now we've talked about the lien search and open permit search, which is your municipal search. So question is about married persons purchasing a property by themselves. No, you cannot. If it's in an investment property, the underwriters on our side, if you're an individual, if you take title, you guys can't see. Oh, it says to everyone, so you see that. Perfect. So the question is, so if I'm married, I can't buy a home by myself. You can purchase the property by yourself. I'm going to give you some context. If it's financed from a title perspective and you take title in your own name, our underwriter requires that your spouse sign the mortgage. They may or may not be on the deed, but the underwriter requires that a married person's spouse sign the mortgage. For the same reason that a married person's spouse must sign the deed is because of our homestead requirements in Florida. You get homestead coverage. And so in the context of purchasing, in order for a lender to be able to foreclose on your homestead property, the law requires, now there's workarounds all day long, but the law requires that you affirmatively execute a mortgage lien against that property, right? That's why you can't your house can't be foreclosed on for like car loans, because that's, I don't know, for a mortgage loan, yes, but they're not taking your house for a car. I mean, unless you specifically agree to that, but most security instruments don't allow for that, right? Um, I want to finish this, but now if you purchase cash, obviously there's no mortgage to be signed. So now your spouse does not have to be included in that. If you purchase in the name of an entity, then there's no requirement that your spouse sign because it's an entity, not an individual. What is an entity, Rico? LLC, corporation, PA. But in that case, obviously now you're needing the lender to approve your entity to be the borrower. That's a good question. And I actually have a slide about some other special issues, and we're going to do that class. We're going to do that class next week, just because it makes sense, and go over some special issues. So we got a question. Can you say the difference with the code violation and municipal lien with respect to closing? Does one hold up closing of the other? Okay, so a code violation will hold up closing using your terms. We cannot close with a code violation. With an open permit, unless the parties have agreed specifically to require that open permits be closed out, we can close with open permits. Open permits are not title issues. Code violations are. Erica, let me know if that answered your question. If not, I can go a little bit further. Deborah's question, must buyer names taking title be based on government ID or noted in some biz? So buyer names, as it relates to when it's financed, we are generally following the lender's documents. When they send, the lender will send us what's called a title request. In that title request, they're going to include the buyer's names. And so from that point, we know how the buyer has started their mortgage application. And so we will edit our buyer name to reflect the lender's, the way the lender has it, because that's what they want to see. They want to see a policy, they want to see a mortgage, they want to see all of our documents matching the name that they have on file. Likewise, ID should match that when they come to sign. We also have as part of our information request process. When the file is open and the information requests go out, we ask for a copy of the photo ID to be uploaded to the portal. Our intake process is electronic. As it relates to SunBiz with an entity, yes, we're looking for it to match. If you are Association Estoppel of Florida, Inc., then that's how we're expecting you to take title, because we have requirements in our commitment that we review operating agreements, articles of incorporation, et cetera, to ensure that everything matches. That's a very good question. Dave's question, the property is a second home or investment property, are they required to sign the mortgage? Same. If you take title in your individual name, they are going to require that your spouse sign the mortgage, specifically because our underwriter's position is that you can change the character of that property at any time. So what that means is, Dave, today you're saying it's your second home and not your homestead property, but you go to move in today and you're like, this is actually nice. It's on the water. This is, no, this is now our homestead property. Send the document to the property appraiser. This is our homestead property, and we've left the closing table with you telling us that it's not your homestead. Ridiculous example, but that's what our underwriter's position is. At any minute, you can say this property is now your homestead. Oh, no, this property is not. And so for that, if you're an individual, your spouse needs to sign every time. Awesome. Perfect. I answered. I'm 2 for 2. All right. So after the title commitment, the lien search, and the open permit, We have the association estoppel if the property is a condo or located within an HOA. Here's what I need you guys to know. What does the estoppel provide us? The estoppel tells us the financial, tells us about if there are any violations, tells us about any requirements for the buyer being approved to live in the community. Here is a example of an estoppel. It's not a collections. There is a current credit for the seller on this one of $3,450. It says credits are automatically transferred to the buyer unless we receive a request to refund with the closing documents. The monthly maintenance amount is $18.75. It's paid quarterly. Next payment due July 1st. Late fee is $80. This is all the information that we get with the estoppel. So what we do, we go through and we add this to the settlement statement. So I'm going to tell you, for example, let's use this hypothetical, this $34.50, seller has a credit that's going to be transferred to the buyer. The parties can agree, potentially, I don't know if a buyer wants this because that's going to increase their closing costs. Because we know that there's $34.50, there is a credit to the seller, we can charge the buyer, credit the seller on the settlement statement for that $34.50 that's already sitting there in the kitty with the association. All right. We also see that there's no special assessments due, right? There's no capital contributions. You guys should take a look at all of this. How does outstanding tax debt affect title? If it's property taxes, they will be paid at closing. If it's personal taxes, like a judgment, if it's been recorded, it will come up in our title commitment. And if you have a common name, when you close, you might get someone else's tax judgments on your commitment as well. The IRS does not play. They want all their money. So let me know if that answers your question, Paris. And also, to be clear, Paris, property taxes are going to come up in two places. They're going to really, well, yeah, three. We pull the tax, what's called a tax cert. We pull that tax cert when we start opening the file. So we'll see if there's taxes due there. You saw at the beginning of, let me just shoot back. You saw here, when we get the lien search, we know whether or not taxes are due or delinquent. See that right there? And then also, if it's bad enough, it's going to come up in our title commitment. It's also going to be a requirement to satisfy past due taxes. All right. Where were we on here? We talked about the capital contributions, equity membership, resale fee, transfer fees, and other fees. So this one is fine. Here's the problem on this one, violations. So the seller had a lot of money in reserve, but the property has 5 violations that need to be resolved, and we cannot close with these violations because on our commitment is a requirement, one, for an estoppel and to satisfy the requirements of the association estoppel. These 5 violations must be resolved prior to closing. So if you owe personal taxes, you can't close. You can close if you have the money to pay them. We order a payoff. It'll be just like a mortgage lien. If that tax bill is yours, is your seller's, not yours, but if it's your seller's, we're going to confirm the amount to be paid to the IRS, and it'll be part of the closing costs. So, short answer. All right. So all these searches, guys, remember we did the title commitment, we did the lien search and open permit search, we've done the estoppel. Now the land survey, that's a form of a search. What is a land survey? The land survey will be conducted to confirm the boundary lines of the property and provide confirmation that none of the property structures are over its boundary lines. A land survey is required generally in every finance transaction unless it's a condominium. Our underwriters do not require a land survey for a condominium for obvious reasons, right? We generally have the floor plan from the condo docs, and it's not sitting within any on its own. It's just a contiguous property. So we won't order, if it's a townhouse, we will. But if it's a condominium and it must say a condominium in the legal description, then no survey is required. Likewise, if it's a finance transaction, then if it's not finance, if it's a cash transaction, the buyer can decide that they don't want a survey. But if they do that, they're not going to have any coverage. They're not going to have any insurance coverage, and their title policy for issues related to boundary lines. Anything that a survey would have identified, if they decided not to obtain the survey, then we can't cover it. We can't cure or cover what we don't know about, right? So this is what a survey looks like when it comes back to us. You see the property, shows all the boundary lines, right? And here's what's important to us. These notes right here. The surveyor is telling us the fence and a shed land in an easement along the north lot line. There's a fence and a shed the fence and the shed, here's your north, and here's your shed. Y'all see that? And there's the easement. And it's laying right on this easement. So what is this saying? This says that in the event that whoever owns this easement, if they want to come dig it up, this shed and this fence are going to be a casualty. That's what it's saying. So we include that as an exception on the policy. Easements are common, and it's a shed. If it's a pool, if it's a piece of the house, now we're having a different conversation. But a shed and a fence, that happens pretty often. Most people, they accept it, kind of take it as a, part of the deal, right? Now, again, if it comes back and says the pool is 5 feet into an easement, that's a problem. You do not want that. The lender's not going to go for that. Everything we get back, guys, we send to the lender. We have to. The lender is essentially a partner with you in this deal. I always use as an example when I do the home buyers workshop. You have when your buyers have financing, you essentially have the lenders that are buying with you. So whereas, let's say, for example, this was a huge issue and the buyers would be like, oh, don't worry about it, we'll take the fence. And the lender says, oh, no, we won't. We don't want that fence in the easement. And guess who wins? The lender. And so if there's an issue with that fence, anything to be resolved, then they would have to do that. We got a quick question. Explain difference between lien, permit, code violation. Okay. That's something we talked about a little bit earlier. So difference between the lien and permit. Open permits are not open permits are not title issues. We can close with an open permit. Code violations are title issues. We cannot close with a code violation. We can open permit can become a title issue for not necessarily a title issue, but a closing issue if the parties have agreed that all open permits must be closed prior to closing. If there's an agreement there, remember we talked about it being in the additional terms section of your contract. If the parties have agreed to that, then we got a hard stop. We're not proceeding with closing until the open permits are closed out. Without that language, if an open permit is discovered, we're going to let you know. The parties are going to sign an acknowledgement and a hold harmless, and we're pushing to the closing table, right? We're trying to get the closing funded. All right, so that's all the searches that we're doing on the title side. You guys already know on your side, you're still doing the property inspection. You're doing the appraisal, right? So there's a lot of searches going on during this process. So settlement statements. Now we're talking about the money. You're going to get, if it's a finance transaction, you're going to also obtain what's called a closing disclosure. The closing disclosure back in 2015, I think I want to say we started using the closing disclosure, been a little while. It now combines the HUD and the truth in lending all together, right? So this is your closing disclosure. All right, you see up here the origination fees from the lender. You see the services that the borrower did not shop for. These are from the lender. Services that they did shop for, meaning they could have gotten a different rate or use a different vendor. These are taxes, property taxes, recording taxes. These are prepaids. They're going into the escrow. These are additional escrow costs. Here's what I want you guys to know as it relates to the settlement statement. 80% of these figures are from the lender. Okay? So it's not the title agent's issue when the cash to close comes back much higher than anyone anticipated. We just receive them, type them in, here you go. Make sure we match and balance. We're pushing forward to closing, yay or nay, right? Review these figures. Definitely want your buyers to review these figures, because a couple of things. One, everyone is human. Something in there may be duplicated. There may be a keystroke, 54 where it should have been 45. Maybe there should have been a credit there from the lender, from the seller, that was omitted. So you want to review these. So this is your closing disclosure. Now, the other settlement statement type is the ALTA settlement statement. This will be used in cash transaction, and is also another form of settlement statement that's used even when it's a finance transaction. This is the one that's commonly sent out to all the parties when the transaction is closed and funded, right? So what I want you to know about this, I like this one because it's an easy debit credit. You can just look back and forth, right? Credit to the seller, debit to the buyer. It's either a credit or a debit. Is it a charge or a credit to someone, right? You see this one has a seller credit for $4,000. You see that the property taxes, you know that the county taxes, or what's called, or ad valorem taxes, are paid in advance. So at closing, the seller is going to be charged. I'm sorry, the ad valorem tax are paid in arrear. So at closing, the seller is going to be charged that amount. The buyer is going to be credited. You know that there's also non-ad valorem taxes, which are paid in advance. So one is paid in arrear, one is paid in advance. The biggest one is paid in arrear. The ad valorem taxes. Ad valorem taxes at value. Those taxes are calculated based on the value of the property. The non-ad valorem taxes are essentially, think of those as kind of like special assessments. Those are for, fire, school, roads, those types of things that in the community that the homeowners are paying for and they're contributing to. You see the loan charges. You see the impounds, which are the same as the escrow. And then you see payoffs, right? We got a quick question here. How can an easement be removed from a power company? Support lines attached. That's a whole process. Literally, that's a process. That's a legal process that you have to, that's not anything that we do at closing. That's something that the law firm can do, but that's a whole process to have an easement removed from the property. All right. So calculating closing costs and prorations. Again, what I just want you guys to know is that, like we talked about earlier, you're going to have a debit to one side and a credit to the other. The seller, talking about the ad valorem taxes, the seller is going to be responsible for the day prior to closing and then back. The buyer is responsible for the day of closing and forward. That's what prorations are, right? Same with the association dues. All right. With prorations, it's essentially saying, what's your portion? Proration, what is your portion of this cost? Now, we just talked about the closing costs. Here's some of the closing costs that are included. Down payment, and so just to use it for an example, down payment, that comes from the lender. Loan points, that comes from the lender. Origination fees comes from the lender. PMI comes from the lender. Title insurance does come from the title agent. Settlement fee comes from the title agent. Recording fees comes from the title agent, but it's calculated using the county's numbers. Property taxes using the county's numbers, and then the cash to close is from the lender, from your calculation, right? Okay. So here's what I want you guys to know. On our website, www.titleexperts.com, if you go here to expert estimates, you can utilize a closing calculator. And this calculator has so many different options. It has the seller net sheet. It has a closing cost estimator. It has a rent versus buy. So you can use that for your client. You can compare multiple offers to see which one is the better offer for your client. Gosh, there was just so many. I would just end it again today. Like, so many different options. I suggest that you guys, once we jump off, go on our website, sign up for that calculator, and use this calculator, guys, when you are preparing for your listing presentations, or even your buyer consultations. Now, the one thing I am going to update right now, the seller net sheet does include the fee for an estoppel. Not every a good number of properties have associations which require an estoppel fee, or a condo, but not all do. So I'm going to go ahead and just take that off. So you just have to know that, there is potentially an additional cost for an estoppel, couple $100. Shouldn't kill them, but I'd rather just take it off versus someone thinking you're charging them too much or something. So that's the one difference you guys are going to see on the calculator next week. We're going to take off that estoppel fee. But guess what is on there that I assume they've done now for every title company? Based on how our contract is written, we have the 9C1. You have the seller select, buyer select, and the Miami-Dade Broward provision, where we talked about, remember probably 2 classes ago, about how those different closing costs are allocated to each party based on which selection you make, 9C1, 9C2, or 9C3. When we started using this, it was not like that. So we told them, hey, these costs are not laid out pursuant to the Florida contract. So we got on with them. And so now you'll see there's an option that says what is customary for this county. If you do what's customary for the county, we know what's customary for the county because we have that map. You should be fine with the allocation of the closing costs, which is what? The title insurance premium, the title search costs, the lien search costs, and the estoppel is on there. But again, remember, we're going to take that off. All right. So use this calculator, guys. I suggest that you use it to, get comfortable and have a ballpark figure on your closing costs. Now, in reviewing the settlement statement, what do we want to know? Prior to closing day, be sure to review the settlement statement to ensure that all figures on the settlement statement are correct. This includes the loan interest rate, credit, compensation. Make sure your commission is there. Make sure your transaction fee is there. Did you advance a cost that you need to be reimbursed for? Make sure that is there. There's nothing worse than getting to the closing table and it's like, we're missing our credit for, a permit that we went and got done with the city, right? So just make sure all your money is there. Now, special issues during closing. This is something that we're going to do a class on because this is a talk all by itself. FIRPTA, Foreign Investment in Real Property Tax Act. How do you work with that? Who's subject to that? We need to have a conversation. 1031 exchange, working with those types of clients. Do you know what that is? Do you know how that impacts your transaction? Working with rental properties. Open permits. We talked about that a whole lot today. We talked about open permits versus code violation. Escrow holdbacks. Are you working with those properly? Is the documentation sufficient for that? Oftentimes there's an escrow holdback for post occupancy. Should it be a holdback? Do you have and what is the amount that you should be holding back? Spousal jointer on mortgage. We hit on that earlier. We were asked the question about, well, what if it's my second property? What if it's an investment property? If it's an individual, title is looking for your wife to sign the mortgage. Seller mail away versus remote online notarization. You guys, listen, remote online notarization, or RON as we call it, is not FaceTime. It is a much more stringent process than just jumping on the phone with your FaceTime on to sign documents. There's what's called a knowledge-based test. You guys know when you go to maybe do like a credit check, and they'll say, okay, where did you live in 1998? And which one of these people are not your relatives? And which one of these cars did you not own? Those are the types of questions that a person that's going to be signing via RON must be able to answer properly in order to be able to proceed with a RON signing. And it's based on U.S. credit. And so if your seller, your signor, does not have enough U.S. based credit information for knowledge-based questions to be formed around for them, they're not going to be able to sign via RON. There are some exceptions, but just assume that it's not going to be easy for them. Also, the technology. Some people don't know how to get themselves in front of a camera and look at this and look at that. So we always say RON as a last resort. If we know sooner than later that a party's not going to be available for closing, which happens all the time, let's just do a mail away. Okay. And then closing day. All of that to get to here. What do we want to know? Make sure that your client schedule plenty of time for closing day. If possible, encourage the buyers to clear their entire day for closing. During the closing appointment, in addition to signing numerous documents, you guys know that the lenders have what's called the funding approval. And they're going to ask us to be able to review the signed documents. Sometimes it's quick, sometimes it's not. It is the worst situation to have buyers like, are we there yet? And then we feel the same way as them, but we can't do anything. So make sure your buyers know this is not a lunch break appointment. This is a full day. If not, at least give us 4 hours. Cash to close. Immediately before the scheduled closing appointment, the buyer will need to make their final deposit called the cash to close. Remember, at this point, it's a wire only. There's no check, there's no cash, there's no money order, there's no barter system, there's nothing. It must be a wire. It must be a wire because it needs to be good funds. It needs to be money that we can now transfer to a seller. A check won't clear in an hour or 30 minutes, all right? Money orders don't clear. And cash, we cannot go deposit and clear for a wire to the seller. So all cash to close must be a wire. Ask your clients. We do this. We're having this conversation so you guys can be good allies in this closing process as well, that your clients keep the wire transfer confirmation, because there's even some lenders that want to see that. They want to see the receipt from the wire to confirm that those funds came from your buyer. We did it in an hour. Questions, questions, questions. That was a lot. It's our little lunch power hour. Any questions for me? Come off mute. Any questions that you have? Let me see the chat. All right. No questions yet. So here's one other thing I want to add as it relates to once we get to the table. Listing agents, wires are going to go out the same way. Sometimes there's an issue with funds coming in from a buyer because of the type of account that they have. You may have an issue with funds being deposited or hitting your seller's account. So the whole conversation about not releasing keys until the seller sees their funds in their account, be careful with that, because the seller could have the same different 3-step process at their bank for funds to make it to their account, to show up in their account. And guess what? That's not a requirement in the contract. The contract says when the title agent confirms that they have money and that they've sent money, you're closed and funded. So let's keep it peaceful. Let's keep it orderly. And let's just make sure that the money goes out, and from there we celebrate, right? Oh, you're welcome, Julie. I'm glad that you guys found value. Why are some of the title companies recently not ready to give the funds needed to wire until the day of or afternoon before? Sylvia, talk to me. I'm going to unmute you.
Why are some of the buyers getting their information instead of at least 2 days prior, the day of, that morning, or the day before?
Oh, so why are the buyers not getting their cash to close?
Why are the buyers not getting their wire information until the day of, which is that morning?
Meaning, why they're not getting their cash to close amount with the wire? Oh, thank you.
Yeah, that's been happening a lot lately.
Ma'am, I agree, and it is painful. It is, so we feel the same way.
Okay.
They're busy. And we even include, you guys close with us, we send from the time the file comes in, we want a loan package, and we want a final closing, we want a final CD 48 hours. We want it. We tell them that that's a requirement, because guess what? Now it gets into, this is what you're asking about. So now it becomes hurried, it becomes rushed, it becomes frantic. Oh my God, what do you mean? And during COVID, this was the worst because banks were closed. The inside of banks were closed. People were doing wires at drive-through tellers. It was crazy. And so the short answer is that's what the lenders are doing. Again, we don't get that figure. We don't know that figure until the lender gives it to us. Their cash to close amount, we don't know until we match and balance with the lender. So I'm glad that you asked that question. I'm gonna tell you really quickly what the process is, because most people think that as soon as the lender say, okay, you got to clear to close, you can come in and sign documents. No. So now you guys know. We find out, okay, they got to clear to close. Now, generally, on the lender side, there must be a closer assigned to the file. So now the closer starts communicating with our closer. The closer is going to send what they call a pre-CD. That's where we get those figures that we talked about in a couple slides ago. We start entering those into our settlement software, and we go through what's called matching and balancing. So sometimes that conversation can go back maybe 2, 3, 4 times. Match and balance until we say, yes, we have the same cash to close amount that you do. Once they do that, then they say, okay, here's your final CD. Now they say, okay, here's your package. They're sending us all these different items. Now, once we get the cash to close, now we're getting it out to the buyers with their wire instructions. So clear to close is not come on in, grab your coffee and your snacks and let's sign. Clear to close means the start of another process. But we love it. I mean, we do our best to make sure that, again, I always tell my people, like, when you go to a restaurant, you know, the kitchen can be crazy, but you as a restaurant person, you know, person that's there, you don't know, you're just fine dining, and that's what we're here for. Does it have anything to do? Nope, it has nothing to do with wire fraud. Nope, they're just busy. No, thank you for your question, Sylvia. Oh, thanks, Deb. All right, guys. So listen, if there's no other questions for today, again, I like to keep it, you know, I like to keep it tight within the hour. If you have any questions at all, my contact information is there. Feel free to, you even have my cell phone number on this one. Text me. No, thank you, Jennifer. Text me, email me, call me. I'm here. Next week, we will discuss the issue, the common issues. We need to talk about FERPTA so that everyone knows how to deal with FERPTA, 1031 exchange, the special issues as it relates to closing. And then the following week, we're going to talk about working with transaction coordinators, right?